Dave Hughes here, and joining us now, the president of the Mississippi Banking Association, Gordon Fellows. How you doing today, Gordon? Good talking to you.
Dave, thanks for having me. That's some great walkout music right there, man. Good bumper.
Well, we're trying to. We had to get it up to the level of having you on the show. You know, we couldn't just do some generic something. You had to have something that led you in properly. Let's get right into the thing that I don't think is getting quite enough attention. To be fair, we have had an incredibly packed news cycle for weeks now, so some of the details are drifting off a little bit. But let's talk a little bit about the financial impact of this election and what impact it could have on all of us, depending on how things go.
Sure. So, one of the really important things about the who sits in the White House is the impact of the regulatory agenda of the president, right? And so the current occupant of the White House, President Biden, has championed several thousands of new pages of federal bank regulations, and all of those create cost and operational challenges for small community banks, particularly rural banks. And so one of the topics that President Trump during his time in office sort of doesn't get a lot of attention for is he led and pushed for a bipartisan bank regulatory restructuring bill, S2155, that passed during, I think, the third year of his presidency. It was bipartisan. John Tester, who's a Democrat from Montana, and Mike Crapo, who's a Republican senator from Idaho, were really the two leaders on that in the Congress. But when you kind of took that, they passed a bill together that reorganized bank regulation and sort of tailored bank regulation for different size banks, right? So would treat a community bank differently than a systemically global important bank like a massive super bank, right? And so when you sort of took that tailored regulatory approach to that legislation and combined it with the tax cuts, that sort of regulatory relief combined with tax cuts really was an important economic driver during the Trump presidency. And so in the last 2 years in particular with the Biden presidency, we've seen kind of the opposite of that. Instead of tailoring regulation, we've seen a whole bunch of sort of one size fits all new thousands of new pages of bank regulations. And so, one of the things that I'm looking for is sort of some clarity from both candidates on what their regulatory approach is going to be in the next sort of 4 years. And they haven't, neither of them have really spoken to that yet. And I understand why. It's not a politically motivating topic, right? You're never going to mobilize a voter by talking about, how are you going to treat, the way the banks sort of interact with each other. But it is an important topic, and I'm very hopeful that either way, that over the next couple of years now, so we're given some time to digest all the new pages of regulation that have come down. And to be fair, a lot of the new rules that are being promulgated now were actually passed as part of Dodd-Frank that passed, over 10 years ago, and they're still being implemented, right? And so it's some of these rules that the Biden administration sort of have put in place are rules that Congress told them over a decade ago they had to do. And so I don't want to sound like I'm just throwing stones at regulations for the sake of regulations. There are important safety and soundness rules that banks need to follow, and those have to adjust over time because the markets change, right? And so we understand that we're for good regulation, but the scale at which regulation has been increasing over the last couple of years is a lot for small banks to digest. And so we're hopeful we get some time to digest that, and there's a little less regulatory change over the next couple of years.
Well, I think even though they haven't talked about it, and you're right, it's hard. You have to go through several steps to make people explain how this topic will ultimately affect their life directly, personally. It will, but it's not as simple as some of the other topics that are just soundbite ready. But I think we can look at the history of the two administrations and get a clue as to what direction it might go in. And here's why I say that. The Biden administration, kind of regulation heavy, let's be honest. One thing that I haven't seen mentioned in a while, you'll remember during the Trump administration, he put into place basically a 2-for-1 rule. If you want to put a new regulation in, you got to get rid of 2 others across the administration, because he was determined to cut down on the red tape. He said that all the time. Again, it hasn't been a topic during this campaign for various reasons, but I suspect he will go back to some form of that type of approach to regulation, and I would suspect that would be a good thing for the banking industry.
Yeah, that was a very helpful rule. And I think the other part of this too is, when it comes to the regulatory agencies, in a lot of way, personality becomes policy, right? And so who are the people that are going to be sitting in the seats? Who's going to be the FDIC chair? Who's going to be the Treasury Secretary? Who's going to be the chairman of the Fed? Who's going to be the director of the Consumer Financial Protection Bureau? Who's going to be the comptroller of the currency? Those are all important questions for that have a direct impact on the bank regulatory environment. And some of that, candidate Trump sort of started to talk about this week, right? I think there was a news report this week that he sort of said he would, encourage Jerome Powell to finish out his term. So, we kind of know that we think he wants stability at the Federal Reserve if he's to become president. I think that's a good thing. On the other side, President Biden has just appointed a new potential head of the Federal Deposit Insurance Commission, or the FDIC. That new head's going through the Senate confirmation process right now. So, there's still some questions about, what kind of regulator is she going to be? Will she get Senate confirmed? Will she serve? What happens to her if the White House changes, right? So, it's early in the presidential campaign to start talking about who the personalities are going to be, but they have a direct impact on people's lives, right? And so, what kind of folks would a President Trump surround himself in a second new term? What kind of folks would President Biden continue to surround himself with if he's to be reelected? Those are really important questions. And if you're sort of thinking about what are your voter preferences, kind of listening to who the candidates talk about and who gets talked about as potential, cabinet members and sub-cabinet members are, I think, important questions for Mississippians to think about.
Well, I think so, because again, it's a direct effect on people, and I'm not talking about. This brings up something in my mind. I've just got to ask you, totally off the subject as we get ready to go into the break. Are there any regulations or any rules in place with the Banking Association governing the amount and what kind of suckers you can give out to the kids through the drive-through window? Because could we bump those up to Tootsie Roll Pops or something, maybe?
Yeah. No, there's not, but there are bulk discounts for banks if they buy a lot of suckers. That I know. I know the more suckers you buy, the cheaper they get, right?
Okay, see, I didn't know that, so that's good to know. Makes me want to go through a drive-through on the way home. But in all seriousness, there is a direct effect on Mississippians, on people, on you right now sitting there. There will be a direct effect on you based on those appointments, which will be made by whoever wins the election in November. And it comes down to, again, remember the 4 years under President Trump. Remember the last 3.5 years under President Biden. And as he is so fond of saying, choose on their record, basically. You know what each one will do and how they'll do it. And I think we want less regulation, not more. I think that's always the way to go. And I would think regulation in a lot of ways is more impactful in banking than it would be in a lot of other industries, because you guys have a lot of moving parts that you have to deal with.
It's one of the most regulated industries in the country, and it should be, right? Because you're talking about people's livelihoods, right? And keeping their money safe and sound. So we don't run away from regulation. We want good, consistent and safety and soundness focused regulation. One of the big challenges, though, Dave, is going to be over the next few years. There's so much emerging technology in the space around, consumer finance is
And
changing.
Gordon, we're going into the break. If you can hold that thought, I actually
Sure.
wanted to get into that regarding technology. We'll do that when we come back with Gordon Fellows on this Wednesday morning edition of Middays in the Element Wealth Studios. Keep it here. Welcome back. I'd like to thank the Marvel Universe for resurrecting that song because it's a great song. We're here on, that's where everybody knows it from now, Gordon. They don't know it for a great song. They know it because of the Guardians of the Galaxy. That's the only reason they know it.
Peter
Gordon
Quill
Fellows,
can really dance, though, can he?
well, Peter Quill thinks he can really dance. We'll go there. I'll meet you in the middle on this one. Gordon Fellows, president of the Mississippi Banking Association, and you started to talk about technology before we went into the break, and I did want to get into that with you. Because technology, it seems it goes in fits and starts. We'll have the same basic setup for, 4 or 5 years, and then all of a sudden we get 72 changes all at once in the way everything is done. And it's got to be hard to keep up with in terms of regulation and just daily operation, I would think.
Yeah, that's right. And sort of thinking big picture, right? Over the course of the next 4 years, whoever's in the White House, whoever controls Congress, the financial space is changing so much. We're going to need some policies that are in place around how financial innovation should move forward. And I think we want to keep, as a country, I think we want to keep a dynamic and competitive market where consumers benefit from the integration of technology and finance. But, if you don't get the regulatory structure around that right, it could bring a lot of new risk into the system, right? And we kind of saw that last year with the Silicon Valley Bank failure and all the concerns that sort of the whole country started to have after that, right? And so, when you think about all this innovation, the banking sector, to our point earlier, is highly regulated. The innovative space is not at all. And so, as new financial products develop, we got to be, I think, really careful to think about bank products and non-bank products that are similar. And I think a really important fundamental for policy decisions needs to be, if there are like products that are financial, they need like regulation, whether they're a traditional bank financial product or a new innovative product that may not be offered by a bank, but may be similar to what banks offer. To keep the system safe, like products need like regulation. And so one of the places that really sort of can rear its head is in cryptocurrency, right? And there's a whole bunch of discussion around about Bitcoin and the future of crypto, and Democrats kind of want to do deep regulatory structure around it. Republicans kind of generally want to say, no, we're going to keep our hands off of it. There probably needs to be some happy medium somewhere in between, where if crypto is used as a means to move money, it should be treated like money, right? If crypto is used as an investment, it should be treated like a security, right? If crypto is traded like commodities, like corn or cattle, it should be treated like a commodity. And there are regulatory structures around money. There are regulatory structures around investments. There are regulatory structures around commodities. We probably, as a country, over the next 4 years, are going to have to figure out how specifically we handle these crypto pieces. And then whatever comes next after that, right? I mean, the way people pay each other is changing, right? But the bottom line needs to be sort of, we need a safe system, and sort of regulatory consistency across the channels is, I think, important. So I say all that to sort of say, I said in the first segment, we're not necessarily against regulation. We're for the right regulation. This specifically is a place where there really needs to be some significant discussions. And I'm hopeful that in the next 4 years, there can be some really good movement on that. And to your point about regulations too, I looked this up during the break. The Republican Party just adopted their party platform at the convention. And it does say, I was reading in the platform, it does say, they want to reinstitute the former president's policies on eliminating regulations when new regulations are formed. It also talks a good bit about cryptocurrency. So these two topics, what's the appropriate level of regulation, and how does the sort of future of finance, what's it going to look like, or both things the Republican Party is considering in their platform. It'll be interesting to see what the Democrats put in their platform when they have their convention later this year.
Well, I'm going to assume it's going to be regulations and taxes. I mean, that's their go-to move, it seems, over the years. The one thing, cryptocurrency, part of the selling point of that from the beginning was that it was not part of the system. But we've already seen problems come up. We've already seen the things with everything from money laundering on down that take place with cryptocurrency. But is it going to be an uphill battle to get our arms around how to regulate cryptocurrency?
I think so, and I think it has been, right? And there's some legislation that's moving in Congress. There's legislation that's been introduced at the state legislature in Mississippi. There's legislation that's passed in other states, and nobody really knows what the right answer is. But you're right, anti-money laundering, it's a real problem. When I look at potential sort of negatives of crypto, what is crypto best at? One of the things it's best at is, whether you like it as a thing or you don't, you can't disagree. One of the things it's best at is evading the national anti-money laundering regime, right? And so there's this new phenomenon called pig butchering scams, right? Where the scammers are usually in South China, and they're encouraging somebody through Facebook or some online market to invest in a bunch of crypto and then send it to the new Chinese girlfriend that they've met online, and then the whole thing. So you kind of fatten the pig, so to speak, and then you butcher the pig and you take all the money away. And crypto is sort of making it easy for people to move money into markets that they wouldn't have before, and people are losing on it as a source of fraud. So there's real danger out there. In fact, several of the federal agencies just put out pig butchering guidance in the last 2 weeks. So that's one example. There are national security threats around crypto hacking, right? Like, if you look at what's funding the North Korean missile development program, they're stealing crypto, right? And then they're using it to fund the development of missiles, right? Which is really pretty scary. So there are real challenges around it, and the banking industry is trying to get its hands wrapped around it. Policymakers are trying to get its hands wrapped around it. I'm optimistic that there's probably a place in the middle. I think the key is establishing for our country. I think the key is establishing a way for the country to continue to be innovative, and for consumers to continue to benefit from that innovation, but do it in a way that continues to sort of keep the system broadly safe and sound. And one other thing I'll mention too, Dave, while we're sort of talking about technology and cryptocurrency, there's this thing called central bank digital currency, CBDC, that the Federal Reserve is looking at, and several other countries are looking at. And people get sometimes a little confused about what CBDC is and what the banks think about it. I want to be really clear. The Mississippi Bankers Association, National Bank Trade Associations are all opposed to the creation of a central bank digital currency. We don't think the Federal Reserve needs to create a digital dollar, because the dollar is already digital, right? If you want to do a online transaction, you don't have to mail people a check or a cash anymore to buy something, right? If you want to complete something digitally, you can already do it. So why do we need a secondary currency to do a digital transaction? I don't think it's a necessary thing, and I think it is a potential sort of new level of risk for the system. So we're deeply opposed to CBDC, and I think as Mississippians sort of learn about CBDC, I think it's important for them to know banks are sort of saying this is a bad idea.
Well, the CBDC really, to me, has the flavor of grandpa trying to do something that he thinks the kids are into because it's cool and it'll make him look cool. The coin that you're talking about, the cryptocurrency, basically, is a stable coin. It's pinned to the value of the dollar. So a dollar is basically a dollar in that coin, which kind of takes away part of the allure of the rest of the cryptocurrency, because it, like stocks, as you said, does fluctuate in value. It's no different than sending somebody money over, PayPal or Venmo or something else. So I agree with you. To me, it's unnecessary. It doesn't serve a function. It doesn't give us anything we don't already have.
Right, that's right. There are some things the Fed can do to allow banks to like close their transactions faster, right? The money moving from a purchaser's bank to an individual's bank, or the other way around. There's some ways that technology can be integrated to allow for faster approval of payments and faster clearing. But that's different than sort of saying the Fed should generate a new coin.
Yeah, I agree 100%. Gordon, we are out of time. I always enjoy talking to you, man. We always have a good time.
Thanks for letting me be on with you, and 2 great bumper songs today. I appreciate it, Dave. It's always good to see you.
Oh, as soon as the show is done, we're going to start working on the bumpers for your next appearance. So, we got to keep it rolling at this point. We got to keep it going.
Thanks.
Gordon Fellows, always enjoy talking to him. We will continue on this Wednesday edition of Middays. We are live in the Element Well studios. Get your tinfoil. That's all I'm going to say.